Good morning to each and every one of you. Welcome back to our second lesson for FAC2602 as part of our exam preparation. So I did inform you that I will be covering question 12 in tutorial letter 102 in this lesson. However, I have changed my mind and decided that we can start working through the latest exam paper, that being for the first semester, the May-June 2022 examination for FAC2602. Now, I will not be covering the entire paper in one lesson. I decided to record separate lessons for each question. So in today's lesson, we are working through question 1, and in the next lesson, we will be working through question 2, and so on. So today's lesson will focus only on question 1 in this question paper, for which we are allocated a time of 17 minutes. So if this was the official exam that you wrote, you would have made sure that you completed question 1 under 17 minutes. And as I've said in my previous video, it is important for you to actually adhere to the time limit for each question. Otherwise, you will run the risk of not finishing the paper at all and not getting to questions where you could have earned easy marks. Because let's be honest, not all the questions are supposed to be difficult. There are some questions or some adjustments in those questions rather that you should be able to do, okay, if you are familiar with the content of the module. But there will be other adjustments that require a lot more attention and focus, and that is not so easy to actually comprehend. And I still believe to this day that the best way of preparing for any accounting examination or a test is to actually work through previous exam papers or previous tests, previous assignments, and so on. That aside from the actual learning units in the study guide, if you have not worked through those examples and exercise questions, okay, for which detailed solutions are provided, by the way, you will struggle to actually pass the examination. Okay, it's important for you to first work through those examples and exercise questions. Thereafter, you should move to tutorial letter 102. Start with the easier questions, and you should finish with the more difficult questions, and then as a final stage of your preparation, you should work through 1 or 2 previous exam papers just to make sure that you are able to complete the exam under 2 hours, because that is the time limit for the paper, okay, 120 minutes. And for the upcoming examination on the 24th of October, they have only given us 30 minutes, or they will only be giving us 30 minutes to upload our scripts, okay, meaning that you have to make sure that you finish the paper in 2 hours, and then you have to upload your answers as fast as possible in PDF format. Okay, so let's get to the actual question for today's lesson. So, question 1 in this exam paper counted for 14 marks, and we are allocated a time of 17 minutes. Once again, I would like to emphasize that this is not the official set of solutions. It is my suggested solutions, as I am quite familiar with the content. However, I am also human. I can make mistakes. Alright, so if there is someone who does not agree with me, you are welcome to let me know, and then we can have a debate on this. Alright, so this is not the official set of solutions. This is not the solutions that were compiled by the FAC2602 lecturers team. This is just from my point of view, as I'm quite familiar with the content. And once again, please note that I'm not an official tutor. I am a student myself with other modules to attend to. I'm just doing this in order to help you guys with your exam preparation. Okay, so as shown in my previous lesson as well, go to the required section first, but because it will help you focus on only what is required, and it will prevent you from losing unnecessary marks, right? Or drafting entries, for example, that are not required, and just managing your time effectively, or as effectively as possible. And yeah, because the exam itself is not very time friendly. So we have to make sure that we don't, we only do those entries and draft only those statements that are actually asked. Right? So for this question, we are required to draft the following pro forma consolidation journal entries of the Czech Limited Group for the year ended 30 June 2021, after taking the above mentioned information into account. So after taking the information on this page into account, so only these 3 journal entries are required. Okay, do not waste your time on drafting other entries. And then also before we start, we need to note our please note section, or we have to pay attention to this section. We have to indicate clearly to which company each account refers. There can be another question that says, okay, you do not need to state the company to which it, sorry, I was actually talking about the second point, the journal narrations. So in this question, they do not require you to give journal narrations, meaning that you do not have to explain your journal entries. You do not have to say, for example, that we are eliminating an unrealized profit, okay, gain on sale of machinery. Okay, that's just an example. But another question that also requires pro forma consolidation journal entries can ask you to also give journal narrations, which is why I said that it's important for you to pay attention to this section right here. Okay, you normally have to indicate to which company each account refers, but not in all questions do they require you to give journal narrations. Okay, so in this question, we will ignore our descriptions for the journal entries. And also important, show all calculations, round off to the nearest rand, and ignore the taxation effect on unrealized profits and all losses, capital gains tax, and dividends tax. Okay, this will be the case in every question in FAC2602 because we only deal with that in our third year accounting modules. Please remember to show your calculations, now, no matter how simple the calculation is. Okay, so from the name of the group, we can identify the parent, okay, Czech Limited. Remember that the analysis of owner's equity is not compulsory for every question. It depends on what they ask of you. Alright, for this example, we will not focus so much on the analysis of owner's equity because we only have these 3 journal entries that we need to make. Okay, so we have identified the parent, so that will be Czech Limited. So the other company that they refer to in the information will be the subsidiary. And then we need to indicate our current financial year. So the current financial year will run from the 1st of July 2020 and it ends on the 30th of June 2021. So this is our current financial year. Okay, let me just correct this. Okay, before we start with the journal entries, we have identified the parent and we have indicated our current financial year because it ends on the 30th of June 2021, so it started on the 1st of July 2020. Now, the first journal entry, now if they ask you to give journal entries, alright, I would suggest that you go to the specific point under additional information that deals with that journal entry. For example, number A requires us to record the non-controlling interest's share in the revaluation surplus, okay, logically for the current year. Okay, so what we will do is that we will go to additional information and then we will search for the point under additional information that deals with firstly non-controlling interest, so the point that addresses the parent's share in the equity of the subsidiary, because we will use that in order to calculate the NCI's percentage, okay, as you will show in your analysis of owner's equity. And we also have to look at the points that address revaluation surplus, okay, both at acquisition and since acquisition to the beginning of the current year as well as for the current year. Okay, now if we look carefully at the given information, okay, let me just pause for a moment because we're waiting for my screen to arrive back from I don't know where he is, but I hope he returns soon, so just be patient. Let me just make sure that it's actually recording. Yes, it is. Because then it would all be in vain. Alright, so for the first one, we just need to calculate the revaluation surplus amount for the current year and then record the NCI's share in that amount. Now, normally they give the journal entries that they ask of you in the same order that the information is given. So we will start at point 1. Now, the following information relates to Czech Limited and 4040 Limited as at the 30th of June 2021. So we have already identified Czech Limited as our parent, so therefore 4040 Limited will be our subsidiary. Okay, now Czech Limited is a grocery food chain operating stores across South Africa. 4040 Limited developed an application to allow for online grocery purchases and a same-day delivery service. Now, at the start of lockdown, Czech Limited acquired a 70% interest in the ordinary shares and a 40% interest in the 9% cumulative preference shares of 4040 Limited on the 1st of April 2019. Preference shares are classified as equity. Now remember that the first journal entry does not focus on your preference shareholders, okay? Because remember that revaluation surplus forms part of our ordinary equity. Okay, so we are just interested in the 70% interest of the parent, okay, because that will mean that the NCI's share is 30%. So NCI percentage in the analysis of owner's equity of ordinary shares, okay, would be 30%. Because if the parent has a 70% interest, logically the NCI will take up the remaining 30%. And for your preference shareholders, the NCI will be 60%. But as I've said, keep in mind the first journal entry required does not deal with preference shareholders. Okay, because revaluation surplus forms part of ordinary equity. Okay. So we are only interested in this part right here, and we have the date of acquisition, which is the 1st of April 2019. And you can clearly see that the 1st of April 2019 fell in a previous period. Okay, so therefore we do not need to split any income and expense items in or for the subsidiary, meaning that we do not have to calculate a post-acquisition profit and a pre-acquisition profit. Okay, because the date of acquisition was in a previous period, it doesn't fall within the current financial year. Okay, the group was formed in a previous period. Okay, more specifically the previous financial year, because the previous financial year would have been from the 1st of July 2 years back. Okay, 2 years back. Because the previous year ran or started on the 1st of July 2019 and the 1st of April was before that. Okay, but the point of the matter is that the 1st of April is not in the current year, so therefore the date of acquisition is in a previous period. Okay, we continue as usual. Now, at the acquisition date, so on the 1st of April 2019, 4040 Limited had been in operation for only a few months. Their retained earnings amounted to 430,000, revaluation surplus amounted to 45,000, ordinary share capital amounted to 550,000, and preference share capital to 240,000 on that date. Remember, for the purposes of journal entry A, we only focus on revaluation surplus. So on the date of acquisition, so on the 1st of April 2019, the subsidiary had a balance for revaluation surplus of 45,000. Okay. Now, the carrying amounts of the assets and liabilities of 4040 Limited were deemed equal to the fair values thereof at acquisition, except for land. Now, land was valued from 1.1 million rand to 1,750,000 rand. Now, due to all the administrative work surrounding the acquisition, 4040 Limited omitted to adjust their financial records. So, in other words, the subsidiary forgot to account for the revaluation surplus that occurred at the date of acquisition also. And during June 2021, which is obviously in the current year, 4040 Limited revalued its land again, and its total revaluation surplus amounted to 750,000 rand after this was recorded. Okay, now I need you to listen very carefully when I analyze this calculation. Okay, now it is due to the fact that they say, okay, the subsidiary did not account for this revaluation of 650,000. Okay. Now remember that this revaluation of 650,000, okay, was not or is not included in the revaluation surplus amount of 45,000. So on the 1st of April 2019, we had a balance of 45,000 for revaluation surplus. But then there was another revaluation that occurred on the same date. Okay, amounting to 650,000 rand. And we did not record or we did not account for this in our financial records. Now, the question is whether we need to record the 650,000. So we adjust the value of land and buildings by 650,000 as it is given at the end of the year, or do we ignore it? Okay. Now, the procedure to follow in this case will be as follows. If they give you a balance for revaluation surplus at acquisition, so meaning the 45,000, and there was another revaluation that occurred on the same date, okay, but was not recorded. The only thing that you do is that you adjust this balance right here by the value of the revaluation that was not recorded, meaning that the actual balance of revaluation surplus on the date of acquisition, let me just show you what I'm talking about, because otherwise it will sound a lot confusing. So the actual revaluation surplus amount at acquisition, so meaning on the 1st of April 2019, is equal to the balance given, which is 45,000. And then we have to add the revaluation that was also done on that date but was not recorded, meaning that it is not recorded. Obviously, it is not part of the 45,000. So it's 45 plus the 650, and this will give you a value of 695. Okay, so 695 is the actual balance of revaluation surplus at the date of acquisition, and this is the balance that we will show in our analysis of owner's equity under the at acquisition section. So if you go to your calculation right here, you will show revaluation surplus at acquisition at the amount of 695,000. Okay, now here comes the problem. How do we calculate the balance for this year? Okay, because a lot of you would have assumed, okay, the 750 represents all the revaluation surplus amounts that were recorded, okay, and the 650 was obviously not recorded. So then you would have calculated, and I also did this at the beginning, you would have calculated the difference between the 750 and the 45, which they have given at acquisition, okay, as the current year's revaluation surplus, because the 650 was not recorded. Okay, so how can it be part of the 750? Okay, now I know it sounds confusing, alright, but as I've said previously, if they gave you, and I need you to make notes of this, because this bothered me as well, and I had quite a debate with the lecturers as well. If they give you a balance for revaluation surplus at acquisition, okay, so if they give you the balance of 45,000, and then they tell you, okay, there was another revaluation on the same date, but was not accounted for. So obviously you need to calculate the correct balance of revaluation surplus at acquisition, which is in this case the 695. Okay. Now the reason they tell you that it was not recorded is just for you to adjust this balance right here. Okay, so it is only for the purpose of calculating the correct balance of revaluation surplus at acquisition. Okay, but the 650,000 Rand already forms part of the 750,000 Rand balance at year end. So it is included in the balance on 30 June 2021. Okay. So we just interpret it as, okay, we only need to adjust the given revaluation surplus amount at acquisition by the amount that was not recorded, and then the difference between the actual balance. So let me just set this down. Okay, let me just put this down so that you can actually understand what I'm saying. So the formula that you will use to calculate the current year's revaluation surplus for the subsidiary will be the balance at year end, and you should follow this procedure if you have a similar question. Okay, so you take the balance at year end, okay, which is the 750,000 Rand, and you subtract the balance at acquisition, the real balance at acquisition, which in this case is 695. Okay, you do not subtract the 45, okay, that was recorded. Okay, you just take the balance at year end and you subtract the actual balance of revaluation surplus at acquisition, okay, which is in this case 695,000, and that should give you an amount of 45,000. Let me just make sure that I've calculated this correctly. Just get my calculator. So 750 minus 695 will give us 55 rather, sorry, 55. My mathematics is a bit off. 55,000. So your current year's revaluation surplus amounts to 55,000 Rand. Okay, and this is the amount that we will use in or to record the NCI share in the current year's revaluation surplus. Okay, so the NCI's share in this amount of 55,000, because we are interested in the current year's revaluation surplus, will be 30%, because we have to determine that at the beginning. Okay, the NCI's percentage in terms of ordinary share capital will be 30%, because the parent has a 70% share, and we calculate 30% of the current year's revaluation surplus, which is 55,000, and that should give you an amount of 16,500 Rand. Okay, so the journal entry that you will make will be as follows. You will, let me just go to the correct calculation here. So for number A, we will debit the revaluation surplus account, because remember that the revaluation surplus amount of 750,000 has a credit balance. Okay, we just need to remove the portion that is attributable to NCI, okay, or non-controlling interests. Okay, just show your calculation. So you have calculated 30% of the current year's revaluation surplus, which was calculated by taking the year-end balance of 750. We have subtracted the real balance of revaluation surplus at acquisition, which was 695. Okay, not the 45, because there was another revaluation of 650 that was not recorded. So we need to calculate the correct balance of revaluation surplus at acquisition, and then just subtract that amount from the year-end balance of 750. And the amount that you should get is 16,500 Rand. And you will credit non-controlling interests as is displayed on your statement of financial position, or the consolidated statement of financial position, by the same amount, 16,500 Rand. Okay, so please just go very carefully through that explanation and calculation, because it confused me at the beginning as well. Okay, because my argument was that the revaluation surplus of 45 was recorded, okay, in 4040 Limited's records, alright? And the 750 only includes those amounts that have actually been recorded. And then they gave you this adjustment right here, which was not recorded at acquisition. Okay, so I had a discussion with the lecturers, and eventually it started to make sense. Okay, so what you are doing here is that you need to adjust the balance or the given balance of revaluation surplus at acquisition, which is 45. You need to add the other revaluation that occurred on the same date but was not recorded. Okay, so all you're doing here is that you are calculating the correct balance for revaluation surplus at acquisition, and then just calculate the difference between that amount and the year-end balance in order to give you the current year's revaluation surplus. Okay, I hope that is clear. Apologies if it is a bit confusing. Believe me, you are not the only ones who found it confusing, because it confused me as well. Alright, but let's move on to journal entry B. Alright, so we are done with A. Alright, 3.5 marks. Now, when you record the NCI share and revaluation surplus, you do not need to show the company, okay, to which each account refers, because that will pertain to the group as well. Okay, the group will have non-controlling interests. Okay, so therefore it's unnecessary to show the company to which those accounts refer. Alright, then we have number B, where we are required to eliminate the depreciation associated with the vehicles since the date of sales. In other words, since the date of sale up until the end of the current year, and this one counts a beautiful 7 marks. Okay, so let's get to adjustment number 2. Okay, this information is irrelevant because we are not required to draft any group statements, so we will not make use of that. Now, Czech Limited, okay, the parent, sold a few vehicles to 4040 Limited, as 4040 Limited needed vehicles to deliver groceries to households. Okay, the total carrying amount of the vehicles on the 1st of April 2020, which was the selling date or the date of sale, was 950,000 Rand, and it was sold to 4040 Limited for 1.1 million, and vehicles are depreciated at 20% per annum using the reducing balance method. Okay, now remember that your journal entry right here does not require you to eliminate the unrealized profit. Okay, we know that we need to eliminate the unrealized profit, but we will not show that journal entry as part of number B. Okay, they only ask us to eliminate the unrealized depreciation. Okay, but for the purposes of explaining the journal entry to you, I will include the elimination of the unrealized profit as well. Okay, now first we need to look at the date of sale, because that will affect what account is debited in order to eliminate the unrealized profit. So the date of sale is the 1st of April 2020. And if we look at our current financial year, which starts on the 1st of July 2020. So therefore, these vehicles were sold intra-group because it was sold by the parent to the subsidiary. This date right here falls in a previous period or in the previous financial year. So therefore, we will make use of retained earnings in order to eliminate the unrealized profit. And we will not debit profit on sale of machinery or profit on sale of vehicles in this case, because the transaction occurred in a previous period. Therefore, we will make use of retained earnings. Okay. Now, as I've said before, remember that the elimination of the profit itself is not required. Okay, but I will only show you the journal entry so that you can understand it better. Okay, so in order to eliminate an unrealized profit gained on an intergroup sale of a non-current asset, which is depreciable, we will debit the retained earnings account, and since this was in a previous period, we will debit the retained earnings account of the company that made the profit. In this case, it was Czech Limited. So to eliminate the unrealized profit, we will debit retained earnings for Czech Limited. Okay, and we first need to calculate the unrealized profit made. So it was sold for 950,000. Oh, sorry. That is not correct. It was sold for 1.1 million, and the carrying value on the date of sale was 950. So therefore, the vehicles were sold for more than their carrying values. So the difference between the 950 and the 1.1 million will give us our unrealized profit. Okay, if it was sold for less, then a loss was made. Okay, then your journal entry would just be the exact opposite. Okay, so the profit made was 1.1 million less 950,000, and that should give you 150,000. Okay, so that is the unrealized profit that was made, and as I've said before, we are debiting the retained earnings account, okay, because we are decreasing the actual profit made by the parent, okay, because the parent made the profit in this case, and the transaction occurred in a previous period. So therefore, we decrease the balance of retained earnings of Czech Limited by the amount of the unrealized profit, which is 150,000, and we will credit the property, plant, and equipment of the company who purchased the vehicles. In this case, it was 4040 Limited, because remember that they would have included the profit of 150,000 as part of the vehicle's cost. Okay, so if you go and look at 4040 Limited's records, you will see that the amount of 1.1 million is shown as the cost price of the vehicles. Okay, because the vehicles were acquired at cost. But remember that it includes the unrealized profit because it was sold intra-group, and therefore we have to eliminate that unrealized profit. Okay, so to eliminate the unrealized profit, we have debited retained earnings of Czech Limited. Okay, if the date of sale was in the current year, so let's say, for example, that this date right here was the 1st of April 2021. So clearly, 1 April 2021 falls in the current financial year. So therefore, we would have debited other income or profit on sale of vehicles for Czech Limited. Okay, and not retained earnings. So you only use retained earnings if the transaction occurred in a previous period. Alright. And remember, if it occurred in the current financial year, so on the 1st of April 2021, then the profit will be included in Czech Limited's other income, okay, in the statement of profit or loss. Alright, so just keep that in mind. Now let's get to the actual journal entry that we are required to make. So we need to calculate the total depreciation that we need to eliminate. And we need to pay attention that we use the reducing balance method. Alright, so we will start with the previous financial period. So let me just make a heading for this. So unrealized depreciation from the 1st of April 2020 up until the 30th of June 2021, because that is the total or the period for which we are required to eliminate the unrealized depreciation. So for the period 1 April 2020, and you'll see why I'm doing this. So for the period 1st of April 2020 up until the 30th of June 2020, because that is the date on which that particular financial year would have ended. Okay, so that financial year would have ended on the 30th of June 2020. So the depreciation for that period that we need to eliminate will be taking the unrealized profit of 150,000, multiplying it by the depreciation rate, which is 20% per annum, and we are multiplying it by the number of months. Now, from the 1st of April to the 30th of June for the same year would be April, May, and June, so a total of 3 months. And that will give you an amount of 7,500. Okay, now we need to take this balance right here into account. Okay, when we calculate the unrealized depreciation for the current year, because we are calculating depreciation on the reducing balance method. So for the second period, which runs from the 1st of July 2020 and ends on the 30th of June 2021, okay, so basically the current financial year, in order to calculate this year's depreciation that needs to be eliminated, we will take the unrealized profit of 150,000, but then we need to subtract the unrealized depreciation in respect of previous periods, because we are calculating depreciation based on the reducing balance method. If it was straight line method, you would have just made use of, or you would have only used the unrealized profit amount of 150,000. Okay, but since this is the reducing balance method, we need to subtract the unrealized depreciation in respect of the previous period when calculating the depreciation for this period. Okay, I hope that makes sense. So if you calculate this year's unrealized depreciation, you should get an amount of 28,500. Okay, so therefore the total unrealized depreciation that we need to eliminate would just be the sum of those two. Okay, 28,500 plus 7,500, and that should give you 36,000. Okay, let me just confirm that. Yes. Okay, now your journal entry will be as follows. Okay, remember this one was not required, it's just for explanation purposes. So we will debit or decrease, because remember an unrealized profit was made. So therefore the subsidiary in this case provides for too much depreciation in its financial records. Okay, because of the profit that is included in its property, plant and equipment. So therefore we have to decrease the total depreciation that they provided for. So therefore we decrease accumulated depreciation, or we debit accumulated depreciation for 4040 Limited. Alright, and the total, as we have calculated, amounts to 36,000, because that includes the previous period as well as the current financial year's depreciation that must be eliminated for consolidation purposes. Okay, now the first account that we will credit, remember there will be two accounts that are credited. Firstly, we will credit retained earnings of the company that made the profit. In this case it was Czech Limited, and this one will be by the amount of 7,500. Okay, because 7,500 worth of unrealized depreciation relates to the previous period. Okay, so for the previous period, we will make use of retained earnings. And for the current year, remember, for the current year, we would have had a depreciation expense. So therefore, we will credit depreciation also for the company that made the unrealized profit, which was Czech Limited, and the amount that you will use here would be 28,500. Okay, just remember to include your calculations. Alright, so for the retained earnings amount, we have taken the 150 times 20%, and we have calculated depreciation for 3 months. Okay, for the year ended 30 June 2020. And then for this year, since we are using reducing balance, you would have taken the 150, you subtract, let me just go back, sorry about that. So you would have subtracted the unrealized depreciation of the previous period, which was 7.5, and then you would calculate depreciation at a rate of 20% for 12 months, and that would have given you 28,500. Okay, and these two should amount to 36,000. Alright, very detailed explanation there. I hope that it is clear. So 7 marks there, because you have to calculate the unrealized profit, and you had to take into account that we are using the reducing balance method. Alright, so this section right here will give you 7 marks, given that you have used the correct company names with the corresponding accounts. Remember, once again, this was not required. Then for number C, alright, what are we required to give for journal entry C? Alright, now for number C, we are required to record the dividend declared to non-controlling interests. All right, for 3.5 marks. So we are done with A, done with B. So we need to record the dividend declared to non-controlling interests. Okay. Let's look at point 3. 4040 Limited declared a preference dividend at year end, okay, for the current and the previous year that was in arrears. Okay, so we have to include the previous year's preference dividends as well. Okay, we have to account for the previous year's dividends as well, because it was not declared in that period. The accountant of 4040 Limited was on holiday when the dividend was declared and forgot to provide for it. Okay, the shareholders were also not notified. Hence, none of 4040 Limited shareholders provided for the dividends received either. Okay, so in other words, 4040 Limited must still account or record the dividends payable, okay, to non-controlling interests. All right. Now, first we need to work out the total value of preference dividends that will be paid. Okay, so your preference dividends. Okay, so how do we actually calculate preference dividends? We take the value of preference share capital, which was given as 240,000. Okay, according to additional information 1. Preference share capital amounted to 240,000 Rand on that date, and the issued share capital of both companies remained unchanged since acquisition. Okay, so we will take the balance of 240,000. We will multiply that by 9% because they have issued 9% cumulative preference shares, so the dividend rate will be 9% of the value. So to calculate the preference dividends, we will multiply 9% by the value of the shares, which is 240,000. And then we need to multiply it by 2, because remember that the previous year's dividends were in arrears. So the company must declare or provide for dividends payable or preference dividends payable for both years. So we need to multiply the value by 2, and that should give you an amount of 43,200. Okay, but remember that this amount right here will be the preference dividends paid to both the parent, because the parent is also a preference shareholder, as well as the non-controlling interests. Okay, we only need to calculate the NCI share in preference dividends. Okay, now the percentage for NCI that we will use in this calculation will not be 30%, because 30% is in respect of ordinary shares. Okay, we will make use of the percentage for NCI that applies to preference share capital. And if you go back to additional information point 1, you will see that the parent, Czech Limited, has a 40% interest in the 9% cumulative preference shares of 4040 Limited, meaning that your NCI would be 60%. Okay, in terms of preference share capital. So therefore, to calculate the NCI share in preference dividends, we will take 60% and multiply by the value of preference dividends paid, which is 43,200, and that should give you an amount of 25,920 Rand. Okay, so the journal entry that we will make is that we will provide for dividends payable to non-controlling interests. So we have to debit non-controlling interests. Okay, because as soon as we declare a dividend, the amount payable to non-controlling interest or attributable to non-controlling interest, as it will be shown on your statement of financial position or the consolidated statement of financial position, will decrease. Okay, so we will decrease that by the amount of 25,920, because that is the amount of dividends payable, and we will credit dividends payable, so we will raise the corresponding liability, and this will be payable by 4040 Limited, but because we are making use of non-controlling interests, we will not be required to show that it is payable by 4040 Limited. Okay, it is payable by the group to its non-controlling interests. Okay, with the same amount. Okay, so basically the same principle applies as with the revaluation surplus. Okay, here you do not need to show the company, okay, 4040 Limited, because non-controlling interests will refer to those shareholders of the group that do not have a majority interest. Okay, your minority shareholders, basically. Alright, but if you want to feel safe, you can input the company 4040 Limited, but it is not required. Alright. And you will also notice that we have not eliminated an intragroup dividend because this has not been recorded at all. Okay, so therefore we only provide for dividends payable to non-controlling interests, and there is not any information regarding ordinary dividends. Okay. Alright, that then concludes question 1. So I would suggest that you study this lesson very carefully, especially my explanation regarding the revaluation surplus amount, because that can be confusing. Okay, I know precisely how you feel. And just make sure that you actually understand how we have calculated each amount and why we have calculated those amounts using those methods. Alright, this then concludes today's session. In the coming weeks, I will be working through question 2 and 3. Okay, question 4 is an essay question that covers Learning Unit 11, okay, dealing with the integrated report. So that is just theory that we do not really need to analyze. So I'm going to ignore question 4. So in the coming weeks, I will be working through question 2 and 3, especially question 2, which was a pretty difficult question. Alright, so stay tuned. I'll see you in the next lesson.